So you haven't found the right strategy quite yet to actually start trading the future markets, whether it's the NASDAQ or the ES or the Dow, maybe gold or oil. Whatever it may be, your poison of choice or instrument that you're looking to trade and which market you love to trade. Watch the video from beginning to end. I've got a lot of pointers that I'm gonna share with you in this video here. Just basically sharing how I actually trade a certain style of strategy, which all is surrounded, around supply and demand. And what I'm looking for are opportunities within the market to where I can use basically two charts, a higher time frame or a higher base chart, not higher time frame because I don't trade time-based charts. I trade range-based charts, but a higher base chart, and then I'm looking to execute my trade off of a lower base chart. The strategy is fairly simple if you spend some time watching, back testing, forward testing, just getting your feet wet so that you can actually understand the strategy and how it actually works, and proving to yourself that you can be consistent enough to be profitable trading the strategy. So the number one thing that all traders need to fully understand first and foremost is the actual structure of the market, because the market can change or shift its tide at any given time. There could be an uptrend and then it turns and then we start to have a downtrend. Now the signals of which, or the signs of which the market is starting to reverse, I've talked about it in prior videos, so please spend some time watching those videos. But I just want to show you an example of the things that I actually look for when it comes to, moving down from a higher base chart in which I mark my first zone, and then moving down to the lower base chart in which I find a zone in which I'm looking to trade. Okay, so again, first and foremost, what I'm looking for is structure. So if we are bullish to the upside here, and we're breaking highs, okay, because you got to be able to see that where we broke highs over here to the upside. This is on the higher base chart. That's telling me, okay, we're moving to the upside. But then we can start to actually kind of move lower to where we get like a pull down, a pull back. The market breaks structure, pulls down, pulls back, and breaks structure again. So then the market can shift from bullish to bearish, right? And then it pulls back again, and then it breaks lower. So the market is just swinging, and you have to be able to see that to understand which way should I trade, going long or going short. If we are continuously breaking structure to the downside, then you want to be looking for opportunities to mark up your charts for key areas of supply and demand. Now, what I want to share with you today is the fact of there could be, fresh zones, but zones that haven't been tapped yet. Like this zone right here, which was from October the 25th. And let's say that we're up in this area here and the market starts to float down and taps that zone, right? So now we got a structure break. We took out the lows here, pulls back, and break structure low to tap into this zone over here. Now, am I going to be interested in this trade area? I'm only going to be interested if the market gets there and it shows me on my lower base my lower base chart where it's starting to break structure to the upside and we have interest to actually go long. Because this is an older zone, and if we're here in October 29th and this was on the 25th, it's not a newer zone. When trading during intraday or during your session, I like to look for swings on the higher base chart where we're tapping into a higher base supply or demand zone, and then looking on the lower base chart to see if it's going to follow suit in the same direction. In this case here, even though we're floating to the downside and tapping this higher time frame, high probability zone, because there is a gap back at the zone, and for all those that don't understand about the gap, that's what increases or makes the trade high probability versus low probability. So when the market gets here, yes, it has all the ingredients, placed back at the zone, okay, which marks it up or makes it a high probability zone. A gap back at the zone, it's been not tested yet, it is a key area of demand, but that doesn't mean that it's actually going to hold. In this case here, when the market gets to that zone, I want to see if the market's going to start to break structure, possibly back to the upside, to show me some bullish strength that it wants to continue through, pushing to the upside. So what we can see here, yes, the market did react off of that zone there, and then it pushed to the upside. All right. So with that being said, this is the first area. You can see the market pulling back. This is actually the 25th. That larger box is the higher base 120 range demand zone that I marked up, as you see right here. Marked it up right here. So once the market taps into it, I want the market to be able to show me on my lower base chart, are we getting some bullish strength to the upside where it's breaking structure higher? Okay, so take a look. Market taps into the zone. we are breaking higher now, okay? We're taking out the swing high here, swing high here. So we're breaking structure back to the upside, right? Leaving behind this key area of demand on the lower base chart. Now, all I'm waiting for is the market to come back to this zone here. So it comes back to the lower base zone now that I've marked up because we have rejected off the higher base zone, which is a demand zone. Again, it may or may not hold, because it's not a fresh zone. It's taking several days for it to get back there to it. And if the market is, starting to make these higher highs and higher lows to the downside where it's breaking structure, it could take the zone out, okay, from several days ago, a couple of days ago. But it does reject off of it. If it rejects off of it and we start to break structure higher, and then it pulls back to a key area of demand on the 24 range chart, which I have marked up, which is the smaller zone here, then I'm going to be interested in going long. So once it taps into the lower base demand zone here, there's also a gap here. This also makes this zone high probability as well. We've got two zones now that are high probability setups. High probability zones, marking the setup in which we're looking to take. The 120 range, high probability zone with the gap. The 24 range chart, we have a high probability demand zone resting right here with the gap. I'm looking for the break and close of the candle. So the break and close would be right here at 20,446, and then you enter to go long. All right. Where do you take the trade back to? Where do you place your stop at? Stop goes on the back end right here where the rejection took place at the zone once it pulled back to the 24 range demand zone. Okay. Right here at 20,435 or 34, say 34. Give it a few points below that because the market loves to come back and test those areas. So lots of times the market may push up, reject this area, push up, and come back and test it to the tick and then take to the upside. So you don't want to get yourself in a situation to where you enter the trade and it comes back and pretty much wipes out your stop by just one or two ticks. Okay, so give yourself some breathing room behind the back end of that stop. Where are you looking to take the trade back up to? Well, if you see, first of all, where there's gaps that need to be filled back to the upside once you're into the trade, look to the left over here. Off the swing where it pulled back, look to see if there's any gaps that need to be filled. In this case here, there isn't. So more than likely, the market's going to run and take out this high up here and start aiming for some higher areas of gaps that need to be filled within the market. If you don't know what I'm talking about gaps, please, they're the same thing as fair value gaps. Please study that concept and understand the market has to mirror itself and fill in those gaps at all times. It just may not do it instantaneously, but at some point it's got to fill those areas in. The market runs back to the upside. So if you got into this trade here, say at 20,446, the market runs all the way up here to say 5,016. And as you can see, it's filling all these gaps back up to the upside, back up to all the way to this gap right here. And then it, rejects and goes lower. So then as the market retraces back to the downside or comes back to the downside, another beautiful area of demand to take a trade off of the 24 range chart. You get into it, boom, it goes to the upside. But what I wanted to show you was this right here, was that as we were breaking structure to the downside right here, you can see we then turned back around and started re-breaking structure back to the upside. We took out this high here, took out this high here, marking up a beautiful area, another beautiful area of demand for the market to come back to, test, and look for an opportunity to go long. This happened on the 29th of October, right around 10:30. So you could have taken this trade here at 9:35, 9:40, shortly after the market opening up, a couple minutes. And then the market pushed up an hour later, gave you another beautiful area or setup off the higher base chart, the 120, right here off this demand zone right here. So then you just go down to your lower base chart and look for the remaining portion of the setup. So now this is a beautiful opportunity here that I want to show you because this is one of those opportunities where the market is starting to break structure back to the upside and pulling back to a key area or a higher base zone off of the 120 range chart. And then if there is an actual zone, a smaller zone which you can redefine or redefine that's sitting on the inside of the 120 range higher base demand zone, like right here off the 24 range chart. So it's basically a zone within a zone. If you can find those type setups, this is a great opportunity where the market loves to, because it's reacting off of a higher base zone. Okay. Breaking structure here to the upside, aggressive area buying just as well. There is a very small, let me see here. Give me 1 second. Very small gap back to this zone here. Very small, maybe a point or so on the higher base chart. But anyways, it eventually comes back to this area here. And because we have a higher base zone and a lower base zone inside, meaning a 24 range zone inside the 120 range zone. I'm looking for the break and close of the candle, get into the trade at 539, and it goes to the upside. Stop loss goes back on the back end of 527. Give yourself some breathing room there, and it goes to the upside. Where to fit? Look, you have all these gaps right here. You have this gap right here, right here. You see, you got the trade right here. So it's got to come up. You get into the trade here at 539, comes up and fills the gap here at 43, keeps going up, fill the gap at 47, keeps going up, filling the gap at 51, keeps going up, filling the gap up there at 56, and it just keeps climbing higher and higher and higher. You can see that right there. So you want to aim for those gaps, and then it goes up here and takes out this high eventually to the upside. Beautiful, beautiful demand setup. Following the structure, after the market was breaking structure here, turn back around, started re-breaking structure back to the upside. Two demand setups there, okay? We got a demand off of the higher base zone and the lower base zone just as well on this pullback. So golden opportunity right there. You will find setups, what I'm talking about, on the charts, if you spend time just kind of back testing. We're looking for a higher base zone to start with, where there's a gap at, and then moving down to see, okay, is there a smaller base zone on the inside of that zone in which I can take a trade from, whether it's short or long. If not, then wait for the market to start breaking some structure. If you're at a demand zone, breaking some structure on the lower base chart to the upside, and then look for a pullback. That's all I want to share with you guys today. Perfect strategy in which you can trade. Try it. It works time and time again. You just need to understand market structure to be able to perfect this specific strategy as a whole. But outside of that, that's all I want to share, guys. I appreciate everyone tuning in on a daily basis. If you're not a current subscriber, please take the time to go ahead, click on the sub button right now. Make sure to turn your post notifications on so you don't miss any other uploads. If you want to join the Discord, the link is down in the description portion of the video. It's the first link. The second link is to become an elite member. For anyone out there that is interested in gaining access to trade breakdown videos where I walk you through trade setups after setup after setup after setup. I have tons of those videos published to the private community for all those that are currently already joined. Thank you for joining. And being, loyal supporters of the channel. But you get the trade breakdowns, the video playlist, and a great video that I cover in market structure, all for $6.99 a month. And there is tons of trade breakdown videos that you can walk through and to understand and grasp these concepts of how I trade this specific certain strategy, okay? But outside of that, that's all I have for you guys today. The link to become an elite member is right below the Discord link down in the description portion of the video. Outside of that, I appreciate you tuning in. If you do me the biggest favor and drop a like on the video right now, I greatly appreciate it. See everyone in the next one. Have a wonderful weekend.